Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to make that transition from day trading to swing trading. This is a very common question that I see traders ask me is they will seek out day trading because of the thrill, the excitement, and on how much money you can make. You know, we'll see YouTubers and TikTokers make millions of dollars every single day from day trading. So they seek out day trading, realize it's incredibly difficult, and then they will seek out other opportunities like swing trading. So how can you make that transition from day trading to swing trading? We're going to be talking about what I did, the approach, and honestly, the way that I would recommend going about doing this. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading and trading in the market, check out our school. It's the Swing Trading Masterclass. Why this is awesome is we offer private live streams, quizzes, lectures, a group chat. But more importantly, you know, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. We teach you honest strategies that you guys can use to make money. So check it out down below. Code Black Friday for 51% off. So click that link, sign up, and guys, let's jump into this. So like I said, we're going to be chatting about how to make that transition from day trading to swing trading. We'll also talk about a strategy that I use and how we're already up handsomely on our investment here. So guys, what is the first thing? So if you're making that transition from day trading to swing trading, the main difference between it is one thing, and that is time frame. As a day trader, you buy a position, you hold it for a couple of minutes to a couple of hours, but you're never holding it overnight. That is the huge difference between swing trading. So with swing trading, you're holding the position, at least for me, on average, for about 6 to 9 days. During those times, you're holding these positions overnight, which can have swings. So the first thing, if you are jumping in and you're going, okay, Carter, I want to swing trade, the first thing I would recommend doing is to open up an account with MOOMOO. Now, the reason I say that is because MOOMOO is a trading broker that offers charting, scanning, and tools for swing traders. On top of that, one of the things they offer is paper trading. Paper trading is using simulated money to practice. And that's the thing. If you're going into trading and swing trading, expecting to fund an account today, start making $100 every single day within the next couple of weeks, I hate to say it, but you are on the path for disaster. You need to take a step back and think of it like a job. You need to think of it like school. Okay, how long does it take a doctor to become a doctor or an engineer to become an engineer? It takes years of practice, hard work, persistence, consistency. That's what you need. That's what a successful swing trader has. So taking a year to paper trade with MOOMOO, and I'll put a link to MOOMOO down below. You guys can get 20 free stocks by signing up. But more importantly, taking a year to practice is going to be so incredibly important for your trading future because you'll understand, 1, the strategy, 2, a checklist for your entry, 3, you'll understand what's going on. During this year of trading, I would highly recommend doing journaling. Journaling your trades is super important because, like I said, you're going to be experimenting. You're going to be learning. So you need to figure out, 1, what's working and what's not working, so you can focus on what's working and how to alter it to your approach. Okay, after you paper trade for a year and you journal every trade, the next thing that I would recommend doing is to start small. Fund that MOOMOO account with $100 or $200 and build up your approach. Build up the emotional aspect of trading because paper trading lacks emotional discipline because it's not your hard-earned money. Compared to having an account with $100 or $200, one of the things is you'll start realizing this is my money. When I lose money, I lose money. When I make money, I make money. So there's a lot more emotional tolerance that trading, that second year of trading will offer. So after you guys do that, I would highly recommend journaling every trade. Don't expect to get rich quick. For me, I've never been the trader of where I try to find a stock at $1 and sell it at $100. I understand, one, how hard that is to find. If I could find a stock for $1 and sell it at $100, I wouldn't be where I am right now, right? Because I'd be a multi-billionaire. I'd be sitting on, in a yacht at a beach. No, I'm the type of trader where I find a stock at $1 and I will sell it at $1.20. But I will do that consistently over the course of a year. So what small profits today, maybe I only make $100 or $200. The great thing about trading is I can use that as leverage for the next trade. So now my next trade, I have an extra $100, $150. So now I make $175 on a trade, and it compounds itself very, very, very quick. So let's talk about approach that I absolutely love, and one of the trades here that we are in on. All right, so like I said, the broker I am using right here is MOOMOO, and they offer really great charting and tools. So looking at this here, what do we notice? We notice this stock has this great trend line, okay? Trends, in my opinion, are probably one of the most underutilized things traders don't look at nowadays. Everybody expects to find a stock that's on a downward trend for 10 cents and they expect it to magically recover, when it's just better to, find a stock on an upward trend and get in on a low. So one of the stocks that saw this was Save, also known as Spirit Airlines. Everybody was telling me, you got to buy it, you got to buy it, you got to buy it. Why would I buy this? This thing does not follow my approach. It's incredibly risky. The stock went from $1 to $3. Everybody was buying the stock, and then it sold off 60%, right? So you guys can see it's not even available to trade right now. But anyways, more importantly, looking at the stock that we actually took a position on, stock on an upward trend, heavy trend line, right? But also we use moving average lines like the EMA line. So you guys can see we have the blue, and then we also have the red. These are what we call, the red is the 200-day moving average line. The blue is the 90-day moving average line. The main difference between the two is support levels. So like the 90 is going to be a weaker support than the 200. The 200 is often a very hard support for a stock. But one of the things here that I want to show you is looking at several time frames as well. And the RSI, the RSI relative strength index, anything under 30 undervalued, anything over 70 is overvalued, but that's very basic. But looking at other time frames, because some time frames will give you a different perspective. So looking at the hourly here, we noticed that this stock here was selling off like crazy, right? You guys will see it had that general downward trend like such, where the stock was selling off, boom, boom, boom. So one of the things here is we noticed this stock break out of this trend, which would have been a great entry point, and then form on this trend line. So one of the things here that we did is we entered on this 90-day moving average line. You guys can see it hit it, and we had that great move going forward. So the next resistance that we have is right here. But one of the things that I always look at is I want to look back at previous history. The last time that this stock was trading above that 90-day moving average line, you guys can see it kind of hit these lines, and then we had this great breakout. So I'm hoping we could have a very similar situation. It kind of consolidates in here, and we can get that great breakout going in that upward direction on that trend line, just like in the past. You guys can see, just like in the past. Let's go ahead and remove this, draw out that trend like such. So, that's the approach we're having here. And, looking at this, we entered here, we set our stop loss just below this trend for a possible push back up to highs, which gives about a 4-to-1 risk and reward, which might not seem like much, right? 4-to-1, okay, Carter, whatever. But imagine if you guys are starting out with $500, right? And you guys find these trades once a week. You trade 52 times, risking that, 2%, 3%? We risked about 2% right here, okay? The risk and reward is about 4-to-1. Well, not 47, 4-to-1. Okay. Your win-loss percentage with your trades can be 50, 40%. We'll go 50, right? After the course of a year, well, look what happens to your account. $2,000 from $500. Well, Carter, that's incredible. But my win-loss percentage is 40%. Okay. Look at that. Okay. My win-loss percentage, Carter, is 30%. Okay. So with a win-loss percentage, you win 30% of the time, but with good risk management, you're still profitable over the course of a year, let's go to 20% and see where we're at. Okay, after 20%, we're down. So about 25% would still make you money, which is awesome. That's a great risk management. You have good risk and reward. You understand what you're doing. That is what makes up a successful trader. Don't expect to make $1 million. Don't expect to get rich quick. Focus on small base hits that compound over the course of a year. So guys, if you guys want to learn how to find some of these stocks, check out our school. You won't regret it. Private live streams, quizzes, lectures, a group chat where we talk about all this stuff. And I hope you guys enjoyed it. Hit that like button, subscribe, and code Black Friday for 51% off. We'll see you guys in there. Take care.